Do yourself a favor and get money smart. The more you learn, the more you know.
I believe in the 3Ds: discipline, determination, and dedication. Of course, the sacrifices you make.
Some of you feel like failure is a status or a conclusion. No, failure is my classroom. You embrace the ups and downs. You embrace those times. It's not about how many times you fall down. It's about how many more times you have to get back up. Just one more time, get back up.
In the middle of these crises, ignited some of the greatest of opportunities that we've ever seen.
The Next Level is the world's leading business and leadership institute. For years, we have developed over 100,000 business leaders and analysts across 19 countries. From North America, to Europe, to Africa, to Asia, to Oceania, we are the key to bring out the next level of success. To spearhead a global movement and create a new generation of investors, Amazon best-selling authors, speakers, and digital CEO. The time is now to level up your potential together with The Next Level.
Okay, good evening. You guys can hear me? Can you help me type whether you heard of quant before? If you heard of quant trading, can you help me type 1? If not, help me type 0. Quant automated trading. If you heard of it before, help me type 1, otherwise 0. Let's see. Oh, Vera, definitely. Our quant X champion each time. JK 0. How about the rest? Okay, so quite a number of you guys actually heard about quant, about half 0. Okay, so I'm just gonna do a bit of sharing and maybe a Q&A today. I think initially I was under the impression that it was a Q&A session. Someone is gonna like host me or things like that. But feel free to ask any question. For those who do not know who I am or what is quant, let me just do a very simple, I would say, introduction and then maybe a demonstration, and then you all can ask any questions. Okay. So very quickly, my name is Sean. Let me go full screen very quickly. And I'm currently a licensed portfolio manager. I'm the founder of Next Level, and they are here inviting me to actually share a bit about my experience. So I've been trading since 2005. Another check, how many of you have experienced trading? If you have, help me type how many years you have been trading or how many months you've been trading, okay? So I know how to share. Now, I personally started out as a value-based options investor, and it changed and I became a quantitative investor, okay? Can I check how many of you do trading and like what methods do you guys use? So like, is it technical? Is it TA? If it's using charts, help me type TA. Otherwise, help me type FA. And I'll share with you my personal opinion on which of the methods is actually better. How about that? And any of you guys? TA, FA, or 0? Totally never invest before. TA and FA, Vera. Okay, thanks. So for me, I used a lot of FA last time, TA, and now I begin to feel that all this data is publicly available data. Okay, so when I talk about publicly available data, right, meaning to say you're not technical analysis, you're using charts. And when you're using charts, what are you really looking at? You're looking at typically price action. If you've heard of this term called price action, how many type P for price action? If not, right, what it means is whenever you take a look at a particular stocks, it can be, I don't know, man, like any stocks at all, Visa, Master, whatever, what you're looking at, right, is a historical data of how the price has been moving for the past few hours, for the past few days, for the past few months. And this price action, all this data is publicly available. Now, I want to ask you guys a question. This is a very serious question because I suspect that all of us, we are here to learn how to profit like steadily in the market, right? Now, I want to ask you a question. In the actual world out there, in the finance world, is it agreeable that the financial institutes are the big boys and they are the one controlling and winning the market? Is it agreeable? If agreeable, how many type A? If you say no, it's not agreeable. Actually, the banks are losing money and the retail traders are making money. Then you how many? Okay, all agree, Okay, all agree. Now, can I ask you something, Do you think they use all this technical analysis and price action? Yes or no? Y or N? Okay, the more I know, the more a little bit sad but the technical, or rather the financial institutes, they rarely look at things that the public look at. So when something is publicly easily available, typically it is not very good data, I would say. Okay, so this is something to think about it. Now, today maybe I want to share with you guys a little bit more about data. Data means, right, when you want to actually say when to buy, when to sell, most of the time, people like to draw support resistance line and those kind of things, right? It is not something that the institutes do Okay, if you draw technical like all the support resistance or simple moving average, they will just look at it and they will say like, okay you continue to do, congratulations, but they are not using this. What kind of data do you think, or how do you think financial institutes actually trade? Do you know? Not sure, right? Not sure. I also didn't know. Okay. So Glenn Lee mentioned order flow. What is order flow? Order flow, it is a level 3 or level 4 data. It is not data that the public usually see. So order flow is like you also add certain volume, add certain like a momentum of the volume or certain order, correct? Or order book, right? They hunt them, they hunt down money. They hunt down money. Okay, Chan, over the years, right? Okay, by the way, this one really chit chat, so you can ask me anything. Share based on what I've known and what I've heard. After becoming an institutional trader and institutional investor or trader, right? I begin to meet with more institutional people, right? They don't really care about you guys, lah. They don't really care about retail investors. You know what they care about? This is quite interesting. What do institutional traders really care about? Y'all think about it. So you a banker or someone who actually is hired by the top banks, okay, to trade. What is their main number one big concern? Do you know? Are they here like thinking what are the pops and moms doing and how can I take their money? Do you think they are thinking about that? They have no time. So whatever people talk about market manipulation to like hunt down dumb money, right? I've never heard any institutional traders talk about that before because it is not big money to them anyway. Okay, so I tell you something funny. Okay, this one I tell you, they are actually interested in their jobs. Let me explain to you again. The top traders in those big banks and financial institute, most of them, they are employees. They are employees, so they are being employed. So they are most interested to make sure they don't lose their job. Does it make sense or not? If it makes sense, how many type S for sense? If you still don't understand what I'm talking about, right? And this one I learned from other institutional traders. So there are some institutional traders, after they left the institution, right? They realize that, okay, I really know what my ex-colleagues are all thinking of already. Every time something happens, they need to actually take action to show their boss they got to do something. Whether the big institutions really make a lot of money or not their big concern. Their concern is they don't do two stupid things so that they will lose their job. That's their main concern. Do they want a big fat bonus? A top few percent ones. But the bulk of them, they want to actually play safe. Play safe. Institutions, do they really make that lot of money? You think about it? They want to play safe. So when we talk about playing safe, right? Sometimes, okay, when we talk about charts and those kind of things, so how to play safe? They actually look at what the other institutions are doing. If JP Morgan is buying this and I'm not buying, I'm an idiot. So whenever a big institutions execute a particular trade, other institutions inevitably will try to follow. Okay, you see, example, let's say you're working for, let's say Citibank, and you're a big trader. Okay, you're in the trading department, and you know that JP Morgan just bought Apple. Now you have a choice. You can don't buy or you can buy. If you buy, and then the price goes down, okay, means that JP Morgan also go down, you also go down. Your rivals go down. So your boss call you say, but JP Morgan also buy, you also down. So both of us down. If JP Morgan buy, you don't buy, it goes up, you are in big trouble. You get it? Okay, so you're in big trouble. So whenever someone execute a particular trade, most of the other funds will actually go. So that's why just now Glenn Lee mentioned order flow, or things like dark pool. I don't know whether you heard of this called dark pool, or basically dark ice kind of trading, right? I mean, you say there's a huge bulk of trading that is like they call it the whales trading. It is inevitable the next few days there will be more and more orders. Does it make sense? Or iceberg? Iceberg. Okay, so correct. So when we talk about IBKR orders, right? Order pipes, all those dark flow, iceberg and dark ice about the same. Okay, so I think if you type ice, you will see dark ice. There's this thing called dark ice. Iceberg. You got used before iceberg, okay? Means that you're a big whale also lah, Chan. Iceberg or reserve. Okay. So there are few this kind of trading lah. Okay. So okay. Now I want to share with you there are many ways to do it. There are many ways to do it. But if let's say you are just trying to do it as what other people are doing, look at a price chart, looking at fundamentals. But fundamentals is still very, very strong way to invest. So fundamentals, okay, maybe I give you all a gift. Okay. Let me go and find it. So this is a gift that's created by my Chief Investing Officer, 𝗲𝗃𝗂𝗶𝗽. Wait, give me a while. Glenn. Oh, okay. I give you all this gift. And I thought it's a quite a good gift because last time we actually conduct classes. We do a lot of this thing called value-based investing. So value-based investing, typically we will go to this thing called Morningstar. Okay. If you all ask more questions, then I got more things to share. Now I also don't know what to share. I see because I wasn't really prepared to do a presentation. So ask me anything, I will just try to share, okay? So Morningstar, let's say we talk about Tesla example. Is Tesla a good stock to buy? I also quite long never go through all these key fundamentals really. So if you look at is there more ratios, financials and things like that? You can see their income statement, balance sheet, and then you can do like a certain analysis to see whether they are doing well or not. Okay. So what my partner did, right, Glenn, he actually created this thing called a stock radar. Okay, so example, if you do Tesla, you analyze. Okay. So this is 100% created by using AI to create the thing. But the data is very important. Data is gotten where we get the data from. We get the data from where? He didn't put here. Okay, but we get the data from some solid websites which is FMP and also Morningstars and things like that. Okay, so example Tesla, you can see the growth potential. This is the growth scorecard, and then revenue 4 out of 5 years didn't grow. Then things like that So we can see. So overall, we give a scoring. You can see, right, like cash flow, is it positive? All this. Anyone of you learn of this before? If you learned this before, how many type F for fundamentals? Okay, have Chan learned before, right? So all these are important metrics. Okay, revenue is growing, EPS is growing, net profit growth comes down. It is not bad. It's not bad, but is it very, very good? We only give 4 out of 5 for growth. Economic mode 1 out of 5. BYD, a lot of people also buy one. Not everybody buy Tesla, correct? Okay, and then valuation, we use a few valuation metrics. Okay, we use current P versus 5 years. We use discounted cash flow, and then in the end, we decided to skip. Okay, guys, can I share with you all this particular resource? But it is with huge disclaimer. You do your own homework. Is it okay? If it's okay, you all can type D for disclaimer. Means that you all do your due diligence. Then I would love to share this with you guys. Okay. So maybe a few more. I think even DBS, those kind of Singapore stocks also have. Or I think someone mentioned Lululemon recently. Give you another example. Type the ticker symbol. This built by 𝗲𝗃𝗂𝗶𝗽. If you see him, help me thank him. So based on the scorecard, you can see all 10 year, tick, looks good. Revenue growing, EPS growing. Then the valuation, you can see P ratio currently 9.6. In case you all didn't know, it's a low P, okay? And even for discounted cash flow, is considered low. Intrinsic value, also all undervalue. So good price. But again, the mode is not very high. Like not bad, can like bite a little small bite, okay? Not this is not a recommendation, okay? So I give you guys this thing, okay? Okay, so post this for you guys. You can go and play around with it. And if you want, nowadays, using AI, you can easily build all this. So a lot of information is out there. AI is also out there. It is the kind of questions you ask the AI to help you seek. Okay, Ken? And maybe we play one more. Anyone thinks of very good stocks? Let's see whether I personally feel that financial analysis, okay, meaning to say fundamental analysis, okay, it is still something viable, but technical analysis is a little bit harder for most people. Or MSFT, okay. Microsoft. I actually quite like this company. Or Meta, MSFT. Magnificent Seven. Yeah, good idea. Let's take a look. So I think that fundamental analysis, wow, this one solid. 10 out of 10. Mode 4 out of 5. Okay, the valuation also looks not bad. Okay, looks not bad. PE ratio currently 24. Okay, but Peter Lynch and cash flow are a bit overvalued. So out of 3 valuation metrics, one of them is undervalued, 2 of them is this one fairly valued, this one slightly overvalued. Okay, so you can actually make your own judgment now. Okay, so Microsoft looks not bad. Last one, Meta. I really like this because last time we really have to go website to go and search one by one, and then now everything on the table already. Okay, so quite easy to see. Again, you all also go and see. So Meta also looks like not bad. Okay, inconclusive. Okay, but actually not bad. Okay, so I want to share with you, this is called fundamental analysis. Technical analysis, reason I feel that there's not much advantage for anyone to use is because there's no advantage. Okay, you know what's the key advantage of fundamental analysis? It's too troublesome already. Like I told you, without having all this website, you have to go and like one website, go and do a lot of hard work and a lot of waiting time. Because for example, we talk about Meta, talk about Microsoft. Well, do they look good? Good lah. But even if you buy now, maybe you also wait for 2, 3, 4, 5 months before the price goes up. But each time it goes up, can goes up 20%, 50%. A lot of people not willing to wait. And because people not willing to wait, you are willing to wait, you have that advantage. So the question is this: you must know your advantage. Okay? NOW. Okay. Okay, so actually, we can do this a whole night. But anyway, my job today is to tell you about quant trading and automated trading. So, okay, but y'all can see. Okay, actually, I like to look at the charts. The revenue look very nice. Looks like going to grow exponential, very nice. Okay, earnings per share also not bad. Okay, usually earnings per share, you see one sudden shoot up, right? This one is extraordinary earnings So maybe they sell away a plant or things like that, and usually it is not sustainable kind of earnings per share. You must ignore this, then draw a straight line like that better. Free cash, it actually looks like a very healthy company. The debt is going down. The ROIC is pretty stable, about 11.3. It's really not bad, fundamentally. Okay. Mode, okay, but the mode wise, okay assess to have 2 out of 5 modes. Valuation wise, undervalue. It looks not bad. I mean, I don't really know much about this company, but the numbers looks quite good. Okay, so thanks for introducing this to us. Okay, Chan. So okay, so fundamental analysis, in my opinion, there is still advantage because most people are not willing to wait, not willing to do homework. Technical analysis, in my opinion, almost forget about it. I feel that if you want to just do pure technical analysis, you are just getting yourself into trouble. This again, my own opinion. So if I offend you or I say something you don't like, please don't be upset. This anyway, I'm the one only I can unmute, so you cannot talk. Okay. If you use technical analysis now, only ignore fundamental analysis can profit or not. I don't think so. Jason, I don't think so. Okay. When we talk about pure price action, I don't think so. So even for our most of our quant, okay. So it's really not easy. It's really not easy. Most of the technical analysis, you cannot even win buy and hold. Okay, so I give you guys an example. Okay, how we actually do it. So we do this thing called back test. We want to have like an advantage. When you invest, you need to have advantage. Like what's your advantage? What's your edge? We call it what's your edge. So this is something that I built. I think Quant Club you all have, right? Cannot see. Wait. Okay. So maybe you all can give me any stocks you all want. Or just now you all look at now, right? Okay, now let's see whether I have or not. Okay, now, oops. Now, okay. So example, if I use Soros board, okay, for the past 10 years. Okay, so this is based on a certain parameters using EMA. These are all price action. Okay, run backtest. Okay, so the advantage that quantitative traders have, right? Okay, make 200%, but each year is 14.7%. Is it considered good? But the maximum drawdown is 47%. So you are making 14% per year, risking about 47% drawdown. Okay. I don't know whether you like it or not. Okay, but so this is something that, well, I think it's decent. The Sharpe ratio is 0.6. Okay, so this is what quantitative investors do to try to gain advantage in the entire financial market. So we take whatever technical indicators that is claimed to be successful, we run through this thing called backtest, meaning to say, okay, whatever technical system that is said to be good, right? We run it 10 years back. We can even go 22 years now, okay? 10 years back, 22 years back, however much data we can get, and we say if 10 years ago I've been trading this strategy, how much money would I have made? Okay, then we can also click on optimize. Optimize, simply put, is to, okay, example here got EMA, right? Got EMA, have to meet EMA and must be above 50 EMA. Why must be 5? Can it be 4? Can it be 3? Can it be 2? So this is what we call parameter sweep, okay? So let me just delete a few just to try out. Wow, 700,000 combi. Give me a while. Let me adjust it. 700,000 combi too much to show during here. 8,000 combi maybe can. 8,000 combi, yeah. 1,000 combi, okay. If I run optimization, they will try out different permutation. You all can see, right? Okay, like the EMA slow 85 cross. So I keep testing different combi now. So it keeps running. Then we find the best combination. So whatever data we can get our hands on, quantitative, we call it quantitative. We even if it's technical analysis, all this, we try to use the computer to help us run through this. Now, again, this is quant method doing on technical analysis. Okay, got it. Later we see which one's the best. Currently, right now, it's 14.7%. We see whether we can get something better. Okay, now I want to explain what we are very interested in is all this quantifiable data. So how much can I make? How much will I lose? What's the win rate? Can you see all this quantifiable? And when it's quantifiable, when it's a mathematical, right, we sort of become the dealer. You know, in casino, there's the dealer and there's the player, those gambler, right? Okay, problem of identify accurate market regime. Yes. Glenn, correct. So can I ask you, Glenn, how do you identify market regime? Like, what are the ways you can do to identify market regime? We have been doing this thing called market regime study for quite some time, and there is no specific science of doing that. But certain ways of a market regime, okay, maybe you can share with me now. How do you? Okay, steady. So Glenn is obviously you are quant, correct? Now, anybody understand what he's talking about? HMM, like Helder-Markov model. So okay, Helder-Markov model, right? Actually, he's still using price data, correct? He's still using price data, but Glenn, correct me if I'm wrong. He's using machine learning models to use price data so that the machine can digest the information and find patterns that the human eyes cannot see. Whatever you see on the charts, the technical analysis, every human can see. You tell me uptrend, everybody also know uptrend. But if you can see things that people cannot see, that's where you have an advantage. Again, correct? So this is something that you all should try to think of. What is the advantage that I have? Okay, anyway, using computer, using quantitative, you can see I run through how many? 1,007, and then okay. Wait, let me shift. So this seems to be the best on Monte Carlo sphere, but never mind. So I changed the parameter. Okay, I changed the parameter as in just now EMA how many I can change a different number okay. And this one has gone through walk forward pass already. Okay, Monte Carlo's didn't pass. So initially it is 14.7% CAGR. Let me run the backtest one more time. Okay, now become 19.9. So get a bit of a bit more advantage And the drawdown is lesser, just now 40-something percent, right? Now 30-something percent. So we use computer to help us. Okay, so this is what quant traders do. We try to get a lot of information, then we get the computer to go and run through and tell us what's the best parameter settings. Okay, so this is the key idea. Now, actually, let me tell you this. I can say that very, very good traders, right? Very good technical traders, they also do that. But if they don't know about quant trading, what they do is they do the manual way of backtesting. So they keep testing and they every day use their real money to test Maybe, like they will try different things what if I actually get a demand zone here, a supply zone here? What if I try to add volume? What if I try that? So they keep trying it, but usually it is the correct thing to do. We must keep experimenting. But quant, we use computer, throw everything in, and they help us do. So there's the key different idea number one. Okay. Now the key idea idea number two is this one. I want to share with you all that whatever that we see on the chart, it is not always the truth. When I say it's not always the truth, it's not because, again, I don't really believe a lot in market manipulation, because as I speak to more and more institutions, it is not market manipulation. It's basically they don't want to lose their job. So whatever people buy, they also buy. Then in the end, it looks like, well, how come everybody is trying to gang out against us? It is not lah. They're just trying to save their job. Okay. So the mindset isn't market manipulation, but it looks as if like something is brewing behind the scene. But when you know what is the real thing, it's quite funny one. Nobody is smart. Nobody is as smart as you think. Okay. It's not like, wow, the whole conspiracy theory. It is not really true. Now, I can't say the same for Donald Trump, those kind of things. I cannot say, okay? But I'm talking about institution okay, just to share with you guys. Okay. Okay. No, okay, so let me share with you this. Trading boards. Oh, okay. So I give you an example of trading board or whatever. So you know, this is actually what is a trading board. A trading board is very simple. So you know, this is the trading strategy that I just now find out. So how many of you think that 19% per year is not bad? If you think it's not bad, type me. I see whether I can send this to you. No, I can't really send this to you. Sorry. This is okay lah. You're also going to remember lah, screenshot or whatever. So this is the trading rules already. Can you all know? This is the trading rules. 3/25/45, then MACD must be 12, MACD slow 13, then all these signals are volume multiplier. Everything is there. This is a trading plan. Alright. So what is a trading board? A trading board is basically, simply put, actually it's a trading plan. This trading plan, you can own sell, go and execute. So you go and draw your own sorry, what stock is this? Okay, now. For example, you go now. Let me explain to you. Trading board is not that complicated one. Trading board very simple. The idea of trading board is very simple. So this one, I need EMA 3, EMA 25, EMA 45. Okay, I don't know whether I can put so many technical indicators because I'm okay. So EMA, oops, alamak. Never mind. Sorry. So I'm going to put in let's say all the rules now. And then basically the trading board is as if, okay, imagine you hire someone who knows how to trade. And then you give the person your account. And then you tell the person every time EMA, the price must be EMA above 45. Then when EMA 3 cross EMA 25 and the MACD is 12 cross 13 and the multiplier is 1.2, you help me trade. So you're giving them the specific rules. Every trading plan must have specific rules. Understand so far? So you give someone to trade. If you let someone trade and the person execute for you and they don't sleep, they keep looking at the charts and they keep clicking for you, that guy is like a trading board. It's just that now it's a human. So instead of asking a human to do, what you can do is you ask the robot to do. So example, I've already linked up. You can see I've already linked my long port or even this one, basically a brokerage to this thing already. So after I run back test, everything okay, I can simply, sorry, I'm looking at my computer, so you see my side face off. I can click deploy, live order, allocation, how much is this? Okay, then I create a bot. So you see Soros bot now. I just click deploy live. So what you can see is generating the script. Then after that, right, it is basically linking to my brokerage. And every time the rules appear, they will help me buy or sell. You can see the trading boards here. Understand? So this is called, does institution use trading board? What do you all think? Does institution use trading board? Okay, by the way, whatever I say, please go and check with Claude, ChatGPT and all that. They sure do, man. They use a lot of trading board. A lot. Okay, they will. Most institutions use quant trading, right? I can tell you, Ivan, based on my understanding, right? Actually, no, not yet. But it's getting more and more. Again, I tell you something, based on what okay, I wouldn't say I know everything, but based on my experience dealing with institutional trader, their main job is to save their job, right? You think they will try to use trading board? If they use quant trading and trading board, then they higher chance of losing their job. You know what I'm saying or not? So not yet. But a lot of the companies, I think JP Morgan recently just opened up a quant trading department. So a lot of the older, bigger companies taking time to institutionalize and building up the quant department, but not the biggest yet, not the strongest yet. Okay, got it. Okay, KK. HFT, it is more like Citadel where they become market maker already. Okay, Ken? So you understand? So basically, this is what the quant does. But the whole key thing that I wanted to ask you guys is this. When you start to trade, you must ask yourself, what is your advantage? What advantage do you have? If you don't have, start to develop one. So for quant, we are trying, again, I honestly tell you, we are trying to build an advantage using historical data and using alternative data. Okay. Sorry, I jumped to the wrong computer. Okay. So I give you an example. So we are trying to find information that people seldom use. So I give you an example. Okay, example. Okay, recently, wow, this is by June's team. Wow, this one's super impressive. Okay, so this one, they actually use data by actually what data they use? Hang on, let me go search. Earnings surprise plus smooth filter. Can't remember. Okay, they actually use earnings. Earnings is actually fundamental data, but they use it in a way to calculate, you see, post-earning reaction, okay, must be more or equals than the selected reaction threshold. Meaning to say, typically, every time after earnings, there's a certain behavior from these particular stocks. But if the behavior is a lot more than the usual behavior, you can choose to long or short. Okay, does it make sense? So it's not the usual price action that you use. But every time there's an earnings surprise, usually the stock will move by a certain amount. But if they move more than the amount or lesser than the amount, I will long or I will short. Understand? So this one is a little bit I will say more in depth. So I can show you guys their results. All the way. Then we go into live trading order. Hang on, sorry, I should have prepared this. This is the P&L, total P&L, 500% in sample or sample put. Where is the Sharpe ratio? I remember this Sharpe ratio is more than 5 or 10 on. Is it like it's a very high Sharpe ratio? So you can see this their equity curve and then it's going up. So this is an example of using level 3, level 4, level 5 market data. We even try to use like 𝗲𝗃𝗂𝗶. Okay, this one DAPL is 𝗲𝗃𝗂𝗶. So 𝗲𝗃𝗂𝗶 is basically, is there a big blocks of trades that people are trying to hide? Okay, let me explain. When people try to hide the trades, right, you cannot hide for everyone. You can hide before the trade is executed, but once it's executed, it must be reported on this website called FINRA. So these are all the information that how many of you first time hearing all this? If you first time hearing all this, can you help me type 1? Okay, I can share with you, most people never hear of all this before. Never one. So you must go and find out information that people never go and find out. And these are the information that institutions are using. Institutions is not using open, high, low, close one. No, don't have. That one is a reaction from a certain information. The price move because something happened. The price move because JP Morgan suddenly buy and then another institution buy. The price doesn't move for no reason. So they are trying to find the reason before the price move. Okay, which is, they call it leading indicator. Okay, which is what we are trying to do now. Okay, so these are some things just to share with you guys. Yeah, maybe for start, a place that you can get free data is this. Okay, this place. You can go and search for Fed API. So they have a lot of economic data. Try to find and then try to see every time they announce interest rate by how much. Is there any stocks that consistently move in a certain way? I can tell you there is one. Okay, there is. Okay, so there's all sorts of data. Okay, my goal here is not to confuse you, just to share with you what institutions are doing. Now, even institutions that are not quant based, don't use computer, they also use all this data. You know what I'm trying to say? It's just that for us, we don't have like 100 traders that we hire from Harvard or Yale University so we use computer to churn out all these things. Okay. Can I share with you all something a little bit more fun? Okay, a little bit more fun is, but feel free to ask question or you all don't know what to ask really. Like I share with you all something more fun. Another thing that's fun, right, that I realized that I really like about quant. This one only okay, is this. Okay, so assuming we will play something fun to see whether, and I hope that through this you all can understand what is but what is quant trading. Because quant trading, one thing that's interesting, that one of the very famous quant firm managed to make a lot of money, is called Renaissance Technologies. And for them, instead of using fanciful stuff, they use mathematics. Okay, mathematics. Then initially I'm thinking, how can mathematics help you win certain things, right? Okay, I give you an example of something that I learn more and more as I learn more and more about quant. Okay, so example, we have a coin. And we know that coin got heads and tails, right? And imagine it's a normal coin. If it's a normal coin, I just ask you all something to see whether we all understand the same thing. Now, what is the probability that it will land on head if I flip? What's the probability? Or forex, gold, silver, all these a little bit harder to use fundamentals, a lot harder. Okay, coin the probability is 50-50, correct? So let me ask you something. Imagine you and I, we have a bet. We say we keep flipping the coin until a certain pattern appear. So I give you two patterns. Then you all tell me which pattern has higher chance. TTH or HTT? TTH is tears, head, or heads, tears. Now, can you all tell me, you tell me, which one will you choose? Will you choose pattern number 1? Will you choose pattern number 2? Or if you think that actually both of them is the same, you tell me type pattern 0. So actually both of them is the same probability, right? You help me type 0. Okay, pattern 0, pattern 0, pattern 0. Okay, what if I tell you, right, actually one of them, right, has 3 times higher chance than the other one? Do you believe or not? So that's why I can tell you, it's just like when you look at a stock chart, on surface it looks the same one. But I can tell you, if you just know simple mathematics, or just now like what Glenn mentioned, hidden Markov patterns, right, you will realize that one of them has a higher pattern than the other one. Okay, I prove to you, guys, I prove to you. Okay, so I let me draw this together. If I cannot prove to you, then means that whatever I teach you is nonsense. Okay, so imagine you flip ahead. Okay, after you flip ahead, you flip again, it can be another head, correct? Okay, if you flip another time, okay, this is the first flip, you flip again, it can be another head, or it can be another tail. So far, makes sense, right? Makes sense, Now, you can, but let's say the first time you flip, right, it can be a tail. If you flip a tail, you flip again, it can be another head, or it can be another tail. So far, the tree doesn't make sense to you. So this is the first flip, it can be head or tails. But if let's say it's heads, you can flip another head, or you can flip another head tails. If so far can understand how many type, okay. Some people, I explained this here, maybe don't understand already. Make sense, Make sense, Make sense, Okay. Now, let me ask you this, So for example, you say that both of them, the probability is the same, right? Equal chance, right? Let me show you this, Remember, we keep flipping coin until the pattern appears. Now, imagine I flip head and head. Now, if I want to get tail head, right, what must happen in this sequence? In this sequence, I must get another 2 tails. Then I must flip another head. In order to get this sequence, makes sense, right? I must have another tail, then another head. But you realize that if I get this sequence right, tail head right, there's already pattern number 2 here already. Does it make sense? So meaning to say, if I flip heads and heads, in order to get pattern number 1, it will first hit into pattern number 2. Agree? If agree, how many type A? Got it, So meaning to say, in the first route, right, it will definitely, no matter what, be pattern number 2. Now, how about the second route? Heads, then tails. If I flip heads, then I flip tails. In order for me to get tail head, which is pattern number 1, I must get tail heads. But again, you realize that head, tails has already been fulfilled. So if I go second route, pattern number 2 is therefore definitely going to appear before pattern number 1. So it's again pattern number 2. Now, what if it's route number 3? Route number 3 is tail, then heads. Now, in order for me to get tail heads, okay, after I flip a tail, I flip a heads, I need another tail, and heads. But again, you realize that before I can hit tail heads, I have hit HTT, which is pattern number 2 again. So, out of 4 routes, 3 routes is definitely going to hit pattern number 2 before you hit pattern number 1. Only the third route, okay, TH, in order to hit pattern number 1, it can be a H. So can you see that out of 4 different patterns, okay, the probability, right? So if you're going to bet, meaning to say, you should go and play this with your friend and then bet with them $50 or what. Say, hey guys, you say, hey dude, like which one do you want to bet? And you bet number 2, you have 3 out of 4 chances to win. There's a 75% chance of winning and only 25% of winning. No matter how you flip, this game is being rigged. Now, a lot of people tell me that the stock market is rigged. It's not rigged, it's you don't know how to play math. Understand? So okay. So I can tell you, whatever that I want to share with you, right, is relatable. So whatever that you see here, if you just purely look at this, you are going into deep problem because you are just like flipping coin without knowing that there's actually different patterns, there's different way of calculating, there's different way of increasing your chance of winning. How many of you find this fascinating? If you find it fascinating, how many type Q? Q for quant. So quantitative actually aims to solve all these problems. And we realize that in the game of stock market and all that, right? There's a lot of financial patterns inside. It's so interesting. It's so interesting that okay, so there's two guys that make quant very famous lah. One of them is called Jim Simons. Okay, actually you can go and look for his name lah. It's very interesting. So he makes so much money. I think his net worth is like what? Or 31 billion only. So little. Okay. 55th richest man in the world. But you don't know about him because he also not like Warren Buffett listed his company or take people's money. But for him, he was a mathematician. Okay. You can see he was a mathematician. Initially he was a math teacher in some university. Okay. But he used this and then become an investor. So this is guy number one. Guy number two that was famous for quant is this guy called 𝗵𝘀𝗶𝗃. Same thing, mathematician, and he actually found a lot of ways to beat the casino and also beat the market. So both of them, right? Do you know what's the common thing about both of them? Besides them being very rich, I tell you one thing, they have invested for 30 over years. They have never had a losing year. 2008, the whole financial crisis crash, they never lose money. COVID, they never lose money. And not only never lose money. Okay, so example, in the case of Jim Simons, let me show you this now. In the case of Jim Simons, this is his Jim Simons fund, the 𝗲𝗲𝗄𝗏. I show something amazing. So, shut up. Okay, so you see this Jim Simons fund never lose a single cent for many years. But the cool thing is during all these financial crises, you all know all these crises, right? When 𝗵𝘁 Hathaway lose 23%, how much they make? They make 77%, 35%, 51%. Then 2008 is the one that everybody knows now. Global financial crisis. The whole entire world, nobody win money on. Ray Dalio, Peter Lynch, whatever you talk about, nobody will make money on. They make 152%. And because they realized during crash, there's a mathematical pattern. Okay, so guys, I know I only have 45 minutes. So I'm going to end and ask whether you have any questions now. Okay, this is fascinating, right? Okay, so maybe I give you guys some resources, okay? But you all can ask question, Okay, so you all can go and read out more about this guy, Jim Simons. Okay, but the thing is he's very secretive, so he doesn't share his methods. The guy who shares his method a lot more is this guy called 𝗵𝘀𝗶𝗃. He actually wrote books about it. I got all his books. I read all his books. Very hard to read until my eyes pain because it's a lot about mathematics. But you know what's the good thing now? The good thing now is there is ChatGPT, there's Claude. So I mean, no kidding. I actually screenshot page by page and I say, can you please explain to me? I don't really understand this. Then I say, after you explain to me, can you tell me how to turn this into a trading strategy? And they did actually give me some pretty strong strategy. Okay, so his book, the one that I highly recommend will be this thing called Beat the Market. Now, Beat the Market, I explained a little bit. So this guy is amazing. You know what's the amazing thing about him? After he makes so much money from the stock market and from the casino, right? His main motivation is not money. His main motivation is to win the game. So after he win the game, he like to write books about it. And inside the book, got his specific exact trading system. I'm not kidding you. Who will do that? Only someone who got PhD, permanent head damage. But I'm not kidding you. This guy actually shared his exact secrets inside. So you must read every single of his book. It's so inspiring. And the thing is, he write exactly, you should do step 1, step 2, step 3, and he explained exactly how he used it for options trading. Super good. Okay. So I shouldn't say this on YouTube. You also go and find his book. It's really super good. Edwards is still alive. 𝗵𝘀𝗶𝗃, right? 𝗵𝘀𝗃 is not just still alive. You go and search for him. Recently, he's 91 years old and he's doing chin-ups. So this is I mean I like 𝗵𝘀𝗃 a lot more in terms as a role model because this guy he used mathematics. 91 years old doing pull-up. You can or not? How many pull-up can you do? Okay, so this guy he actually use a lot of mathematics in his life. He said the chance of me getting a lot healthy is by exercising and eating certain things. So he shaped his life in a way to optimally make it a healthy and happy life. quite a cool guy, very, very cool guy. Okay. So please read about him. Okay. So before I end off, any questions? Any questions? Okay, so gold, okay, I share with you, Jason. Okay, gold and silver, actually, there are things that you can think of one. You're talking about commodities, correct? Now, so gold, they are correlated and non-correlated to certain things. So let me give you some examples. So usually, give you some, wait, minute. If you are trading gold, forex, and things like that. For those in Connect Club, I think recently you're in for a treat, right? Where one of my guests talk about gold. Okay, GLD. Example. Or you can talk about XAU lah. XAU also can. Okay. Okay. Now, example, can you see that the blue color is silver, the candle is gold? Can you see that? Can you see that? Can you see? Okay. So let me explain to you. Usually, normal traders who that trade, this is 1 minute, 1 minute. Normal traders that trade gold, they will say, okay, I'll support here, demand here. Every time there's a certain pattern, I buy and sell. If you go to the confirm, they will say, it's like there's a better way to do it. So for let's say quant traders, right? You realize that silver and gold, no matter what, they will go up and down together. You realize that? You realize that they dance together? Okay, in case you don't realize, maybe I give you something else. Maybe I compare gold to Visa. Okay, let's say Visa lah, okay? Okay. So you can see that gold and Visa is very different one. Like you can see, maybe I do into day. Oh, actually gold and Visa. Okay, because both of them currency. Maybe I give you another gold and Tesla or gold and Exxon. Maybe try Exxon. Can you see like they move very differently? They are two different, very clear two different assets. Can see or not? Okay. Okay, cannot see. Can see or not? There are two very different assets, the green color and the candlesticks. Yes or no? Can you all see it's two different, very different assets? They don't like dance together. Okay. Whereas for gold and silver, can you see like they are always converging? Now, what does it mean? What does it mean, right? Is every time they diverge, you just short one and buy one. In the end, they will converge. They keep converging, because gold and silver, they are technically about the same thing. It is just at a different value. But whenever, if you go into 1 minute, especially, this one we recently learned one. I haven't backtest yet. Okay, but the thing is, every time they converge, or every time they diverge means like they are priced too far away from each other. You just short one and buy one. When they merge together again, you make money already. Example, let's say you see here. Let's say you see here. So example, this one is silver, right? You short $100 worth of silver, you long $100 worth of gold. Both must be equal value. So you can see the candle is gold. Then in the end, when they converge at time, the price, let's say here, went down, right? Can you see your gold, because you buy gold, the cheaper one, it goes down, you lose 0.39%. You lose 0.39%. But for silver, okay, it goes down here, you make 1.04%. So net you still make. Do you know what I'm trying to say? So this is called pairs trading, or in quant pairs trading. Please go and read about all this if you like this, okay? Building a pairs trading strategy. Or you can use. Can you explain pairs trading on gold and silver? And is it a good intra? Okay, now. Gold and silver is a good pairs trading. Okay, it's a market neutral strategy. Whether the market goes down, Donald Trump say anything, both go down together. But because you short one, long one, go down together, you're also not scared. If hedge each other, then you are making it's called statistical arbitrage. Okay. So I mean, for those who really know how to do that, they use this thing called Z value, Z score. Okay, there's quite a number of things, but basically we can do a back test. Then we say, can you write a trading strategy? Maybe API. Okay, got it. So, oh, okay, because my particular cloud, there's a certain skills lah. Okay, so they will run the idea and things like that. Okay, so they will actually help me go and run through the whole thing, test out the whole thing, and then write the thing. Okay, so for forex, right? Okay, again, I'm not an expert. I have heard of certain theories. I've heard of certain theories. Like example, gold, there's a certain minimum gold. When you actually mine gold, there's a certain cost to it, so it cannot be below a certain cost. But I'm not too sure whether that hold waters. But pairs trading, I know that it does work. Okay, Ken? So any more questions? Okay, so Jason, these are all very good questions. When you talk about stop loss, take profit, and all that, right? If you remember just now I show you, there's this thing that we do. We use the computer to go and test out the whole thing. Okay, so when we do back test at time, right? Can you see this is we have stop loss, we have take profit. Can you see that? Then when we click optimize, we will try different stop loss, how high, how low, how many percent. So in the end, we have to back test, because most of the assets, when they move together and they split or diverge, right? The thing is, sometimes they can diverge too much and you may have to do a stop loss, right? But you want the optimal stop loss, meaning you say some stop loss you put too near, you lose a lot of time. You put too far, you lose too much money. So what's the optimal one that help you make the most money? So you have to go and do this thing called optimization. Okay, Ken? You have to keep testing now. Do I know the exact stop loss? I don't. But I trust historical data. Now, is historical data definitely 100% accurate for future data? Answer is no. But if you don't even have historical data, what makes you think you can go and fight in the future? You know what I'm saying? So example, every single casino game, I told you it's all mathematics already, right? So how do they actually know that if they play this game with you in the casino, how do they know that they will keep winning you? They do tens of thousands of simulation. They test it out. They use mathematical data, and they open up the game to let you play lah. So it's after testing. And is it confirmed? Let me ask you, is it confirmed that the casino sure win money? What do you think? Casino, is it sure win money or not? Yes or no? Don't know how to answer. Yes, given a lot of people play with them. If only one person, let's say that night, for some reason, only one guy come, and then he play red or black. Red or black, he got 49% chance of winning on it. 48.7% chance. Then he win already, he go out. Then nobody come to the casino already. That night, the casino may lose money. Correct? If let's say there's only one player come in, play something with them that also have equal chance, almost equal, the casino lose lah. The casino only can win. So there's no guarantee casino can win. But casino can win based on a few principles. Number one, enough players. Laws of large numbers. Statistics only works in the laws of large numbers. Okay, this is very important. So what does it mean for us as traders? Now, what it means for us as traders, okay, so the laws of large numbers means that as you play more and more, the probability will hit into it. So, okay, in other words, right, we mentioned, we flip a coin. Is it 50-50? It is 50-50. But is it possible if I flip with you right now, I flip 10 times, 8 times is heads? If 8 times is heads, also possible. Why? Because 10 times is not a large number enough. If I flip 1,000 times, roughly about 50% will be either heads or tails. Roughly around there. It becomes nearer and nearer. So for us as traders, especially quant traders, you need to, number one, have a trading strategy that has advantage one. So example, this is the strategy. In my opinion, not bad lah. Okay, there's a CAGR based on historical, and then got 64% winning rate. Okay, so got advantage. But got advantage is one thing. You need to let the advantage takes place by giving enough trades. 14 trades actually not say a lot, but you need to actually have a lot of trades to actually hit this winning rate. Okay, understand? Okay, again, I do hope that it has been beneficial to you guys. Now, if you are interested to learn more about quant, are you interested to learn more? If you're interested to learn more, and again, sorry, I didn't know that I'm supposed to prepare a presentation. I thought it's Q&A. I thought somebody will be asking me a question. If you want to learn more, okay, I'm going to give you guys a link. This is a link to our preview masterclass. I promise you that it will not be a waste of time, because I'm a bit sorry that today, I hope I never waste your time. Again, I'm very underprepared. Okay, so I'm really, I apologize for that. There is this link. It is a preview to another full workshop. Just want to share with you very openly. But in that preview, I promise you that we actually do go through step by step. We have system, we have all the slides, we have all the proper demo, which I didn't prepare today. I'm really apologetic to it. Okay, can So I'm going to give you guys the link. Okay, this is the link. I think there's 2 days to choose. Oh yeah, thanks. Yeah, okay. So okay, maybe I spend another 5 minutes to answer any question, then we can end it. So this is the link. You all can go and sign up, and then you all will learn something. This is my promise to you, okay. But I want to share with you, it is a preview. Okay, be very open. Now, Jason asked, what's the difference between a gold, GLD, and XAU, correct? XAU USD is actually CFD. GLD is an ETF. Okay, so number one, XAU USD, they trade, if I'm not wrong, 24 hours, 24/7 until Saturday. Whereas GLD, it is like US market. So in between, there will be gaps. You get what I'm saying? So the thing is, depending on what platform you are trading, Jason, what are you using? Are you using 𝗵𝗂𝗏𝗂𝗏? Are you using MT5? What are you using? Depends on what you are using, then that one will be available to you, okay? But essentially, it is similar because it is a ETF on gold. By right, it's supposed to move similarly as gold, okay? Anything else? Any other questions? Okay, so again, when you invest or when you trade, right, you must ask yourself, what's your advantage? If you don't have advantage, you are going inside there to give money to people who has advantage. Okay. Oh, AUD is 23.5. Oh no, the XAU is 23.5. I thought that one is the gold's futures. So forex also 23.5. It's also on futures now, is it? Thanks, Vera. Okay. So know your advantage. So after you know your advantage, second thing is make sure that your advantage is play out by laws of large numbers. So position size is super important. You must keep surviving for 1,000 times before you know for sure high chance you make money. Actually, also know nothing is sure. Nothing is guaranteed. So you must go in there with your eyes open. Casino also know that they go inside there, someone may win them. But based on probability, based on mathematics, they know that they will win. If they cannot win, you keep winning money from them, they drag you out to beat you up. Okay, but in the option stock, so we can't do that. Okay, Ken? So I do hope that you've learned something. If you did, help me type V for value. And then that's all I want to share with you guys. And I do hope that I will see you guys around next time. Okay? Thanks a lot. Goodbye.